Hello everyone, this is Juan Sarmiento and today is Monday, February 28th. I apologize for Friday. I had an unexpected event, so I couldn't record the video, but that's quite all right because this is not about trading every day. It's about trading whenever it's convenient. That's the philosophy behind my style of trading. So let's examine quickly the account. Right now is close to 100,000. You remember that we started this account with half that amount, so we have doubled our money essentially. This year so far we have $7,000 in profit. Not bad. That's 7% in just a few weeks. Now you can tell here what the market value is on each one of our trades, and they're all waiting to be modified. I don't think I have anything right now. The volatility is quite high, so we have to wait until it comes down. Here's the VIX. You can see a weekly a weekly chart on it, but we can put the daily chart. And right now it's around 30%. That is I'm not going to say the highest possible, but it's pretty high. Okay, so which means you don't want to start putting money into new trades because the volatility will come down, and this is the time for us to take profits essentially. And you can see our trades have declined today, which is a good thing because volatility tends to increase when the markets are down. So let's see. I'm going to examine each one of these trades and see if we can take profits on some of them, starting with with AXP. Let's look at a chart, and this stock has been going up nicely since earnings, and the decline seems to have come to an end. Perhaps it's going to go and reach a new high, so we want to take advantage on the upside. So let's look at what the trade looks like. Let's go to the Analyze tab, and this is what it looks like. It's inside the cone. Remember, we correct or sell calls, whatever, or puts if the market is above the smiley face or below the other smiley face. We have two smiley faces here, right? And if the market was here, we would be selling puts. If it was here, we would be selling calls. We are in the middle and it's in the cone, and that's fine. Okay, let's look at the monitor tab, and here we will see what our trade looks like. And we only have the one trade. We haven't made any corrections on it. And you can see we have March 18th is the shorts. Let's go. We can copy this to the Analyze trade, to the Analyze tab, in case you have more than one. And it tells me that I have $867 in profit. If you want to see how much you have won for the day, you can hide the simulation, and then you see the $116 to the upside. Let's look at a chart, and it looks bullish, so I'm perfectly happy with leaving it like that, and I will only change it if and when it goes above the smiley face. Okay. I suggest you also look at the volatility in the chart here, this historic implied volatility. You'll see that it's pretty high here. So as the market goes up, volatility will come down, and that would affect my trade. So it is important that you have your deltas positive so that the appreciation on the upside compensates you for the depreciation due to volatility. And so I say, well, around 30 delta is fine, and 15 is not bad. Okay. If the market declines, that volatility would spike, and we would make additional profits. There's nothing to do really, because the 18 of March, you can see here, is 18 days from now, and we don't have to change anything until 1 week before the expiration. So I'm going to leave that alone and go to the next trade, Juniper. And the first thing is to take a look at the risk graph, and it looks like a loss, but it's inside the cone. Is that for real, or we have made any adjustments? Well, go to the monitor tab, and yeah, it is for real. There's only the one trade. You can take this to the Analyze tab and hide the position, and here this is a loser of $330, but again, March 18th is the expiration, so we leave it alone. And it looks like it's going up as well. The stochastic is pointing up, and is there inside the Ichimoku cloud, which is yellow. So this stock, a difference of other stocks, is doing well. And so we want our deltas to be positive, and it's 151.86. So it's very, very positive. So I would think that we are going to get our profit on this trade sooner or later as it goes into the cone. So we're going to leave it alone as well. Let's go to TER. And this is what it looks like. It's gone down, and now we corrected it. How did we correct it? By selling puts. Let's go to the monitor tab, and you can see that I did sell puts as we went down and calls as we went up. You can see that. And there's a whole variety of adjustments here. And let's look at the TER here, and you can see that the market value is $887.50. But we have so far this year made $2,300. So we don't need to worry too much about it. It's, even if it goes to zero, this market value, we already made our profit. So we are not going. This is not going to turn into a loser. You can adjust it for sure. And right now the delta is 17, so we don't need to adjust it any further than that. It's a delta positive, and I'm perfectly happy with that. And the March is the expiration on those. Everything else is on the 14th. And you can see that I rolled them up as we went up, as the stock went up, and those now are pretty worthless. But as we went up, we were taking profits by selling the 35 calls and buying at a higher strike price. When the market went down to 110, then I sold the 35 puts and bought 110 puts. That's a way to take profits. Okay? And right now, all I need to see is a strong move in either direction, and that will give us additional profits. We are sitting pretty here at 17 delta, I think. And in either direction, we should make additional money, so there's no need to change anything. By the 18th, we could choose to close the trade, or perhaps roll to April the 11th, and that will be the last trade because the longs are on the 14th of April. And it is important that you check this number here, because it tells you, this number here, it tells you how much money there is in the trade that you could lose. Okay, let's go to UPS. And this stock is declining, it seems, but it's bouncing back intraday. You can see the stochastic is pointing up. Good. Let's see the Analyze tab. And here we have a 17 delta. We have a whole string of trades on this stock. You can see that there are two trades here, the 210 here, and that's a calendar spread. And what that means is if the stock goes a little higher or stays there, I'm fine with that. Okay, and you see that we have a put at 190 that is, and that will be on the downside, and then make this trade looks like this. And I say no need to change anything on that one. And then on the other side we have the 220. You can delete that. And then we have 220 calls and puts, and then we have a call that I roll up to 230, and then you have your short puts and calls. And you can see that this is delta positive. Okay, so the stock going up will work fine. If it goes down strongly, presumably volatility will increase. Okay, and all we have to do is worry about this when it approaches March the 11th. Then we start closing the trade. Other than that, we are here to June the 17th on this side. And all you need to do is make sure that you have a slightly delta positive. 28 sounds great. The whole thing is 17, so it's bullish, and that's probably what we want. The market seems to be bouncing back up. That doesn't mean it will make new highs. It might go halfway and then continue down, who knows. Let's go to Wells Fargo, and Wells Fargo is sort of the same picture, you know, the market bouncing from the bottom here. Let's go to the Analyze tab. And here the volatility is negative, the delta is negative, so we need to change that. Let's take a look at the chart. And yeah, we're near the bottom here, and this is a buy signal, so what do? We sell puts. That's volatility is high, so those puts are gonna come at a premium. You can sell the short-term ones, but that's gonna increase your number of legs, not legs, but the number of replicates in your puts here. If you know, that means to get in and get out, you need to pay more commissions. No big deal. But I would rather sell these ones. And if we were to sell everything, look at the deltas. Well, we want to sell at least two, huh? One or two. Yeah, so that this turns positive, the deltas turn at least positive. My philosophy is to make it a little positive. There you go. 9. If you did 4, it's too much. I'm going to do the 3 because who knows, the market can still go down, huh? So we're just simply taking our profits. And this is what you do. Obviously, if you are looking at the market as it bottoms out, and if you have enough presence or knowledge to know that the market has made a bottom, then you do what I just did, sell puts. Okay, that's how you take your profits. If I had been here on this day, today is Monday, so that would have been Friday, on Thursday when the market bottomed out, I probably would have said, oh, it looks like it's going to go further down. But now we are thinking now seriously that there's going to be a little bounce here. So don't feel bad that you didn't catch the bottom here. You just say, well, now the evidence is that this market, as well as other markets, seem to be going up. Let's go to the SPY, for example. Yeah, that looks like a very strong move up, and the stochastic is pointing up. How about the Dow Jones? Let's use the futures here. Same thing, it's a very strong move up. It doesn't mean it's going to make new highs, it just means it's in a strong bounce right now. And so perhaps this is the time to take a little profit, and perhaps when the market gets strong again, or a little strong, we might find other trades to make. Okay, that was Wells Fargo. And that's it. Okay, I don't really have new trades, so we're just happy to be in the plus column here, and that's all there is to it. Okay, thank you very much for joining me, and see you next time. Bye-bye.